Hello Forex traders, welcome once again to this amazing channel. On today's trader talk, I'm going to be explaining what Euro USD is going to be doing next, because today is Sunday, and you all know that every weekend I do posts and I do send on my YouTube channel what's and what's affecting the market and how we are going to be taking advantage of it. Either we should be waiting or we should keep our hands and wait. Either we should tight our hands or keep our hands aside. Anyone you want to keep, when you want to put it, but you understand what I mean. So on Euro USD, you all know that I'm also a top-down analyst. So using break and retest as and Fibonacci as a strategy. So let's go to the charts. Okay, we're already in the chart, so let's start analyzing the market. Now on the monthly time frame, you all know what I usually do. Now on the monthly time frame, that's where I usually find my directional bias, and let's find the directional bias because I've done this countless times. If you check my channel very well, you will see it. So but let's still do it. Now you can see the market has been creating highs. This is the overall high the market reached before this reversal that I created down here. So this high, this is low, this lower low, this lower high, this lower low, this lower high, we can call it equal highs, then equal low, high, low. This is also a downtrend. I always what I mean. Low, high, lower low, lower high, equal low. Are you seeing what market has been doing? So market has come back here, created a lower low, came here. This was a resistance zone. If you check it very well, it's also intersect together with Fibonacci. Market came here, was creating a what they call it here, a double top here. That's what it was based on ranging, and you all know that to any range there must always be an impulsive move. So we are expecting this thing to respect the directional bias of this direction as bearish. But what do you see? Market came here, brought out this little bit of something, then bounced back up. Are you seeing what the market did there? That was a clear playing. Market came here to play with our emotions, came here to play with our psychology, came here to play with everything. So now, since the market has created all this thing, we're expecting market to come here and create another leg to be like lower low, a lower low. You understand? But the market refused. It came here, came here shallow. So this leg that is here, you all know price action. You all know the behavior of price action. So market, as it came here, it now show a week. The market has been exhausted. Now this low is very higher than this low. Are you seeing? This low is higher than this low, and this low also came here and broke out structure. Look at this inner, what they call it here. Market came here, according to SMC, swept out liquidity. You understand? This is price action bias. I'm just explaining what the behavior of what market is doing here, so that I can find the directional bias and tell you guys what market is going to be doing next. Are you getting me? So as market came here, it came here, swept out this little bit of liquidity here, went back up and broke out structure. Are you seeing what market did? Now, are you seeing? So as a break and retest trader, I knew that market is, as market has broken out here, market is going to still come back to this place before continuing its movement, because there's a theory called market move from zones to zone. You can see this is a clear to zone that has been retested multiple times, and it's a monthly time frame key level. It is a monthly time frame key level that always been respected. Now, so breaking down this, you could see that the market directional bias is bullish, because we'll be expecting market to come to this zone, at least to this zone, before thinking of any other thing to do. Are you seeing? Before thinking of any other thing to do. Now, not just that, if you come here and you drag your trend line from this place here, we're going to be looking for any trend line. You all know the rule of trend lines. Now, if you come here, touch this other top side here, this top, where that this thing is. If you touch that top there, you see that market was playing on top of that trend line. Now, if you come to this other top, let me show you. Market came here, also came here, like broke out from this place, like from here, Are you seeing? It broke out, retested it and went back up. If you check it very well. Are you seeing? Now let's use this other trend, this other top here, so that you can see market also cleared it. Now let me drag that one so that I can start drawing all the whole trend lines that are within, that can affect this market, that will stop this market from going to that upside. So I can show you. Don't mind my chart. My chart may look nasty now, may look rough. So, but the main thing is the idea. So I want to show you so that you can see that there's nothing stopping this. There's nothing that will stop this from moving to the main direction that it may likely go. So we'll be expecting markets. Let me see. So we're expecting market to go to touch through. So as you can see, these are the main trend lines that I can see. Or is there another one? Let me see this one. As you can see that's this what they call it here. You can see here, this candle here has broken out through all this trend line that you are seeing here. So when market came to this place, you could see that it was giving some minor reactions within this trend line here, and a bullish engulfing candle broke out from all this whole trend line, came back to it. It was like as if it broke out, retested back to this also trend line. It was like a break retest continuation that also intersect together with this support, support zone together with the trend line, intersected back on it. Now it is going back to touch this resistance zone. So I'm going to be taking out all these points for you to see now that this market is bullish. Now I'm going to be taking out all this trend line. I would have liked to leave this upper trend line so that I can keep myself so that whenever market reach that side, I'll be able to know if, when I'm doing my top down analysis, not below, I mean only. So I want this thing to only appear on this time frame. So as you can see, I'll be expecting this thing to come to this zone. Maybe if it try coming to this same point here, maybe this thing may touch it, may stop it from going back to the upper side, then it may drop. I don't know, but for me now, I'm interested in this to come to this point here. Now since I see that this thing is bullish on the monthly time frame, I'm going to be coming to the weekly time frame to check for any bad boy or top or a who is it? Now back to the market analysis. Sorry for that interruption. So on the weekly time frame, I'm going to check for any bad boy that may likely stop this thing from moving to the upside. Now on the monthly time frame, sorry, mind you, this my analysis that is here is somehow rough. I'm just doing it just because to explain for you guys what is currently going. My chart does not look like this. Once I finish my analysis, I clear out everything and focus on the main thing next. That's how I do. So this thing helps to keep my analysis and my psychology in check, so that I'll not be over complicating things. I keep things simple. Now I'm back to this same chart. Now what are the things keep making this thing from stopping, that may hinder this thing from going up? Now I could see that we have this double top there. Are you seeing this double top? So market came to this place, so market may likely react to this double top. That is one. Are you seeing? Market may likely react to this double top, or if it breaks it out, I'll be expecting a breakout, a retest, then continuation. Now you could see I could just expect this in as a double bottom. I could just make this as a double bottom, and market has cleared it out, retested back on it, and went back up. Now if you check very well, I could see something that looked like a head and shoulder at this point here. If you go to the daily time frame, you see it more bigger. This is a left shoulder, this is a head, this is a right shoulder, and this is the neckline. As you can see, market broke out, retested back on it, and went back up, retested back to this support zone, and it went back up. Now back to this weekly time frame. What can you see at this point here? You can see the market has been ranging inside this box for long. You will see the market has been ranging inside this box for long, so we're expecting market to break out of this box to give us a more solid confirmation that market is going to come back to this resistance zone there. I'm going to be taking out this support zone. I don't know why it's showing, it's reflecting at this on this time frame, which is not supposed to. So now, as you can see, market has been ranging within this box here. Now, not just that, market also inside the box, market also created this bullish candle. Now you could see that if we are to calculate the volume of each candle here, we could see that the buyers are more than the sellers, telling to tell you that buying pressure is high, so we should be expecting buys. Now the candles are telling us that buys, monthly time frame is telling us buy, weekly time frame is also telling us buy. Are you seeing the way top down analysis are going hand in hand? Now since we have gotten this idea, we'll be expecting a huge buy. Now when market came to this place, created this massive engulfing candle that broke out this this top here, this supports, this resistance zone that turned to support now, and broke out it, one whole candle, one weekly whole candle broke out of it. Now another candle also broke out. Are you seeing? Then sellers pushed it back. Now this is a major area of concern. This candle here is a major area of concern. If that this candle was able to close above at least this zone, this point here, then I'll be like, okay, this, what they call it, is going to be a legit. So this thing here is going to be making us to be extraordinary careful on how to buy this pair. Because of this candle here, we are going to be extraordinary careful. Remember, we don't trade in a ranging market, we trade on a trending market, just like this. Break retest. You understand? I caught this buy. I also caught this buy. You understand? I think so. Now that is when you're trading on a what did they call this? Forgotten it. When you're trading on a market that is moving nicely, but not in a ranging market, you'll be making a lot of money. But when you're trading a market that you're trying to trade in a range, you find out that you are losing a lot of money. That is the reason why we are going to be extraordinarily careful when trading this pair, because this thing is still inside the range. Are you getting me? This is still inside the range. So let's go to the daily time frame. Let's see if the daily time frame also respects the monthly and weekly time frame direction. If we could see that, then we can say, okay, then we will be very interested, but still conservatively very careful to ensure on how we're going to be taking our trade. Now it's better to be very careful than to lose money. You all know that. Now I'm going to the daily time frame. Now on the daily time frame, I'm coming, let me arrange this support zone that is reflecting on that time frame. Now I'm going to be showing them below. Now I don't want it. If you go to the daily time frame, go to the daily time frame. So now on the daily time frame, you could see the market has taken out. Now just wait, let you see this trick. You could see on the weekly time frame. On the weekly time frame, market was still inside their range. Or we go on the daily time frame, you could see the market house was inside this range. Later on, what did you see? It broke out of the range. Now it also retested back on this support zone here. Are you seeing? Now I analyzed this. I was waiting for at least a matured pullback, because I'm a matured pullback trader. That's how I usually enter my. If you've been following me, you know how I usually entered my trade. Now I wait for a matured pullback, but this is not a matured pullback. It is not compared to this. Understand? You see the candle that broke out and the candle that pulled back. The candle that pulled back, it took a faster time for it to pull back. I needed a candle that would take a higher time for it to pull back. An impulsive move usually take a very quicker time to create than a pullback. So this pullback was created very quick, in which I don't like it. So I was waiting for a more matured pullback, something like this pullback or like this pullback. Are you getting me? Or something like this pullback. Are you getting me? Not something like this. So I needed the candle. So the candle of this was showing selling pressure, and I was not interested in it. So if I was to now, the reason my market, I was very interested in this, but though I didn't take trade on it, was because it was on a Fibonacci level. And you all know that I'm a Fibonacci trader. I also use Fibonacci. I don't use Fibonacci to play. Now you will see that market broke, retested back on it, and pinned at the Fibonacci level. And you saw that the Fibonacci level also intersects together with a resistance, a support zone. Are you seeing? Also intersect together with a support zone, showing you that that point there is where the big banks will be very, very interested in their buys. Now let me take out this thing. Now you could see now that the daily, the monthly, weekly and daily are also in alliance. They are all respecting each other. If that the daily time frame was showing bearish, was showing sell, and the monthly time frame was showing buy, then I'll be like, okay, we should stay out of the market, or we could risk a lower, we could minimize our risk, then decide to take the trade. You understand? But we'll be at very, very high risk because we are not following the direction of the market. Now, but you could see now that the monthly time frame, weekly and daily all respect each other. So this is a complete top-down analysis. Now, how are we going to be taking advantage of our trade? How are we going to be entering this trade? How? Now, our first target, if we are to enter this trade, is going to be this point here. The reason why this point here, because I've come to realize that market does not respect sometimes before reversing this point. Market respects this point or the weekly time frame, this exactly point. Do you understand? Market sometimes does not come here except when there's a high momentum of buys. High candle, you can see that all the candles are bullish, very, very high volume of candle. That's when you can see, all right, let me just put this here. But when you can see something like on the weekly time frame where you see just ordinary a weak rejection, you should be extraordinary careful. You understand? You should be extraordinary careful. There's something that a wise man said. What is that? His name? King Shady. Yeah, he's a forex trader. He said that you can never get broke while taking profits. You can never get broke. Are you listening? So it's better to take your profit here early than to keep your take profit there and market came shallow to your take profit while you were sleeping and reverse. Are you seeing? It's better to take your take profit there. So it's better to be conservative than to be aggressive. So that is the main thing. Now, since you could see now that everything now are in alliance, we are going to be going to the 4-hour time frame to see that the 4-hour time frame is the place where we usually place our trade. We don't take our trade in any of this time frame because if we are to enter this in, our SL is going to be big. Since I know the market is going to go here, if I was to enter this trade from here, my stop loss is going to be here. So you could see that if I enter this place here, my stop loss here, you see I will not make a lot of money. So that's the reason why I'm very, very conservative, waiting for markets to do this. I'm going to be going to the daily time frame, the 4-hour time frame, to look for trading opportunities. Now going to the 4-hour time frame. Now on the 4-hour time frame, what can you see? Let me look at this. On the 4-hour time frame, what can you see? You can see that when market pull back here, it created this pattern of what they call it. It created this base. Market came here, tested it, pull back again, retested it, went back up, retested it again, went back up, retested it again, showing you that market does not want to break this place, and this place is very, very high. So for me, when I wanted entering this trade, I drag a line here showing that market will change structure because I realized the market has swept out this liquidity beneath this place. That means like a fake out. If you know what I'm trying to say, it's like a fake out. Traders that took trade above on this point here or above here while early, because of this candle, market gave them a little bit of profit, then faked them out. So this is like a liquidity. Market came out and swept out liquidity. That is their stop loss, if you don't understand what I mean. So I've explained both using break and retest, SMC or ICT, anyone you want to know. Now, but it's price action. Price action is understanding the behavior of markets without using indicators. Now you could see showing the market does not want to break here. Now I came here and sweep out the liquidity, the stop loss, take out the stop loss of all traders I see here, faked out them. Then what do you see? A pull to the upside. Market came here, came to this point here at this tip here, now created this massive candle, and this candle looked like a reversal candle. If that this candle printed out on this point here, I would have been very interested to take the trade and drag it to the next take profit, next take TP, you understand. But you could see that it is not, this candle, this reversal candle is not obeying the direction of the market, so we cannot take trade here. No matter what, we cannot take trade here. It's better to follow, not to do counter trending, because counter trending is a sin. Now what am I saying here? I'm going to be waiting for this. If market should break out of here with this same type of candle, should break out and break out from this high, break out this high and close above it, and listen, I'll be advising you to take your trade buys, but I won't be taking the trade because that does not meet my criteria of entry. At least I want 2 touches on the trend line, 1 touch, 2 touch, then the next touch. Since market has created this touch here, I want at least a pullback to this next zone here. Then I'll be expecting a pull to the upside, maybe a smaller retest or maybe a breakout, and I'll be expecting a retest, then a break. That's how I enter my trade. But you could see now that it's only just 2 touch here, and market pull back a little bit, creating this base here, at this point here. Then but I think market may break out up, but let's see how the market will do. If the market should break out up, I won't be taking my trade. I won't, except if the candle is very high. But no matter what, I won't be taking trade on it. If market should break out from here, I'll be expecting a pullback, then a retest to the trend line, then another candle, break out of the highs. Then I can be saying, okay, you can risk any money you want to risk, target the next zone. But don't, when you're risking, always apply risk management. Use a constant risk management. Do not add, do not reduce. A constant risk management in all trades you take. So that's what I'm saying on Euro USD. So this is a complete top-down analysis on Euro USD. So when taking trade on this, please make sure to be extraordinary careful. So now for the last part, if you like my content on how I usually break down my charts using break and retests, and how conservative I am, though you all know that I don't usually enter trade very early because I'm a very conservative trader. If not, I would have entered at this point here, catching to this point here. I know that this may give you like a 1 to 3 risk to reward, or a 1 to 2 risk to reward, in which is very okay. But we are looking at a higher fish. We are looking a fish that is more better than that. Are you getting something like here? You get market is targeting this up high, this point here. If you are to enter this trade here, let me calculate the pips. Give me a sec, let me calculate the pips. If you are to enter here, let me assume the market came here, broke out from here, and you are to enter from there to this point here. That is 300 pips. We want to catch 300 pips, but first, we'll be targeting something like 100 pips, 135 pips to 300 pips, 300 and closer to, let me just round it off, 400 pips. That's what we are going to be catching. Are you listening? That's what we're going to be catching, we're going to be looking at. So why are we going to always be in a haste to take trade? We should not be in a haste, rather to be conservative. It's better to, that's what they say. There's an adage that I don't know who said it though, but there's an adage that said that the patient dog eat the fattest bone. So if you catch something like a 1 to 4 or 1 to 5 risks to reward on this trade, isn't it better than catching a 1 to 1 risk to reward or a 1 to 2 risk to reward, in which your heart will be beating? Like if I see this type of trade now like this, and my entry model should form, I can enter risking the amount of money that I always risk on my trade, using proper risk management, close my charts and go and do all that things. Only when I should be expecting is maybe after the day, or maybe when I just want to just check my charts. But I will place trade and be very relaxed, because I know what I'm placed. Because I wasn't in a haste, I was very conservative.
Are you getting me? So this is what I'm going to be expecting on Euro USD. So let's see how the market plays out, and I will see you when you take your profits. Have a nice day. Please make sure you subscribe and like that, and like this video, and also click the bell icon the notification bell icon, so that whenever I send a video, you will be the first, or among the rest, the first that were notified. Thank you and have a nice day.